Hello, everybody. Thank you for joining us today on Robbie South Teaches How Money Works. Today, we're going to have a guest on the show, Barbara Tilka, and she's going to be talking about some of the things that are problematic with the financial industry and some ways that you can help correct some things that you may have heard that were incorrect in the past. And this is going to be talking about credit, how we can make improvements to make you understand how it works and how you can do better. So Barbara, you want to go ahead and introduce yourself for us?
Great. Yeah, thanks, Robbie. I'm Barbara Tilka. I have been working with credit for, 20 years. And I started doing it because I was working with people trying to recover from a life event, whether it was divorce or bankruptcy or back when foreclosures and short sales were happening. So I jumped in to really help and on the financing side as well. So I still help people with their credit. I'm a certified financial credit counselor, and I'm also obviously a financial advisor, but it doesn't ever, helping clients every time credit comes up because it can really hinder achieving any financial goals. So this is a big topic that affects everyone.
And credit does, like you said, affect every aspect of your job, or not your job, but from every aspect of your life, from jobs to loans and things like that. So with that being said, what are some of the most common myths that you hear about credit?
I would say, number one, I hear people say, I don't want to deal with that collection. It'll fall off in 7 years. I've heard that for years. People sort of count on a collection kind of getting old and then eventually it, falls off. And in fact, creditors can actually, buy and sell debt. So one creditor, it may fall off, but it could get sold off to someone new. And so that's a big one I hear. The other one that I hear, and I actually heard a bank tell my son this, when you have a credit card, make sure you carry a balance because that will help your credit. Not so. And we all know we don't want to be paying interest if we can help it. So that's definitely not, certainly in the interest of the bank to carry the balance. So anyway, those are the two common ones.
Exactly. Like you're talking about with the credit card, when you're carrying a balance, that is the rule of 72 working against you. And we all know that money doubles quickly when it's working against you. We want to make sure that that doesn't happen. All right. So what are the other biggest mistakes that people might make to damage their credit so quickly?
I would say, people have been told, well, if you have a collection, whether you owe it or not, just go ahead and dispute it. So that dispute word comes up when you're looking at a credit report or maybe one of those apps that you see like Credit Karma. This can actually make a mess of things. If you do have an old collection, maybe it was an error. Maybe it was something about, a utility bill, and it hasn't reported in the last, 4, 5, 6 years. If you dispute it and it gets verified, well, then it becomes a current or active collection and actually can drive your scores down. So that's where I have a little trouble with some of the credit repair services where they just simply dispute every month and they charge you a monthly fee. One of the big reasons why I got into, consulting on the credit space, just because it was too often people were spending a lot of money doing that. The other thing that I see a lot is people rely on the mail for their bills. They're not really paying attention to, I owe my cell phone bill every month, and they don't get that bill in the mail for whatever reason. And certainly lately, mail has been erratic. Then they may forget to pay it. And a late payment can, ding your scores 80 to 100 points, I've seen.
Oh, wow.
And so lates are the worst. And you definitely want to make sure. I'm a big proponent of auto pay, auto draft, with reminders far before the bill drafts. So those are two then.
Absolutely. And like you was just saying, personally, what I do, like you said, it's on auto draft for some of my bill, a lot of my bills. And also the company, whoever the bill is with, will send me an electronic notice saying that the bill, is coming up due. And also my bank will send me a notification saying, hey, this payment's going out. So those are some really great tips to help people remember to pay their bills on time.
Right. And that's one of the reasons people don't like auto draft is they're worried the money's not in the account. Well, if you budgeting properly, and certainly need someone to help you with that, that's what we do. But just making sure that you're reminded and that you know that it's coming out.
Absolutely, all about knowing how money works, right?
Right, exactly.
So, at what age should someone start building their credit, and what is the best way to go about doing that? I mean, would you start as an early teenager? Or would you wait till your early 20s? What would be a good way to do that?
Well, definitely, age 18 is when you essentially are on the grid, for credit reporting. So I always let parents know, keep an eye on your kids' credit. Make sure that they're watching it, because sometimes people take advantage of young creditors because they haven't had much going on, and they may be victims of identity theft. But 18 is the age. There's a lot of really good credit unions, especially that will establish credit for people who don't have a credit history. You can do it very safely and very carefully without having to go and apply for a bunch of credit cards online. You do not need to do that. You actually only need two accounts, two different kinds. One would be what we call revolving. That's a credit card. It doesn't have to be a high limit. $300 is fine. And then installment. Installment typically is something like, car loan, furniture loan, whatever. However, you can do it carefully at a credit union using your own money as collateral. Those are really good ways to just get started to build it. And it doesn't take very long. It's a few months of activity and you're in good shape.
So, what if somebody would prefer to have one credit card for gas, one credit card for, say, groceries or eating or something along that lines, and use specific cards for certain things? Would applying for more cards hurt their credit in that aspect as long as they're paid off, or how would they want to go about doing that?
Well, I think if all you have is a bunch of credit cards, your scores are affected. If you have a car loan and a credit card, and let's say you pay off your car loan, your scores actually can drop a little bit because you're now only holding revolving. And certainly opening different cards can be dangerous because a lot of my clients, they forget. And, if you got a bunch of department store cards and gas cards, a lot of people think it's because they get a discount. Well, that can be a high price to pay to try and get that, just because you got to keep track of it all. Some of them have annual fees. It's not uncommon for me to see someone's credit damaged because an annual fee got, charged and they didn't pay it. And then all of a sudden they're late and they were not aware. They don't use the card very often.
Right, and then also to build on that, something that I've seen lately is rewards. You have like I was looking at flying here a while back, and I seen where Delta, for example, was going to offer a ton of rewards if I spent X amount of money in a certain time frame. What are your thoughts on that?
Well, I think, just spending money to try and save can be dangerous. I'm a big proponent of cards that give you rewards that are actual money or credit back, as opposed to I have to go fly on a certain airline. And most credit cards now will have rewards that are cash back and so forth. And, as long as you're paying your bill every month in full, which is the ideal goal, then rewards are a good plan, good way to do it.
Very good. Great information there. So, can someone just add another person to an open credit account and get a good credit rating that way? Maybe they want to add their parents or something like that to try to improve the rating or something.
Yeah, years ago, it used to be the case if you just put your child on your credit card as an authorized user, that helped build their credit. And that's not the case anymore. On the other side of things, if you do put someone on your credit just so they have access, the danger is if they're late on their credit, it affects the newly, added person negatively. So not a great thing to be adding someone to your credit just for the sake of trying to increase their credit. Not going to happen.
Okay, good. Great information there. So if someone, and we hope no one has to do this, but let's say they file for bankruptcy before they met us and we were able to help, wasn't able to help them out of that situation, and they're trying to rebuild their credit and they've got some credit cards and they're wanting to add their parent to the card as a authorized signer. That might not be the best option because it could bring down their parents' rating.
Because if there's any derogatory accounts on that credit rating that can, if they're adding them, if they do something, they're late, it can bring it down. But when you add someone to a card, just because you've got a bankruptcy history doesn't necessarily mean that they're going to be attaching to that. Not at all.
Great
It's the actual credit line that you're adding them to that you have to be careful.
Great information. There we go. All right. So, what are some of the things that are affected by a bad credit rating that people don't often realize? I mean, that could be a number of things, right?
Well, and it's interesting because people don't realize that your car insurance rates can be affected because there's an actual, credit rating score when insurance, when they give you a quote on your insurance. So yes, that can negatively affect your insurance rates. Another thing that is affected is obviously if you're applying for renting a house or an apartment. In some cases, your score has to be a certain level for you to actually rent, or you have to have a co-signer. The other thing a lot of people don't realize is applying for jobs. Now, certainly certain financial jobs are key, that you have to have good credit rating, but definitely government, military security, security clearance. That can be a real negative. If you've got damaged credit, you could either lose your job or lose security clearance, or not get a new job. And then, of course, any kind of lending. If you go to get a car loan, or mortgage, your credit rating is definitely going to drive those interest rates. And that's where a lot of money is wasted. I have a client who was spending over $800 on a car loan that should have been, monthly payment, should have been around $400 for her. Well, that's $400 a month that she should be putting aside for a lot of things, emergency fund, retirement savings, and so forth. So that's why we really drill into, credit rating when we're helping someone with their financial goals.
So, in a nutshell, you could sum it up as if you have a low credit rating and you're not making your payments on time, it's actually costing you more to use credit because you're having to pay more in interest on the credit cards or the loans or anything like that. So, in a sense, you're costing yourself more money by not paying things on time and paying them off and getting ahead and having a higher rating. Would that be an accurate statement?
Exactly, and it's really draining your finances.
Absolutely.
Spending a lot of money on interest instead of paying yourself.
Absolutely. Well, some people like to say that we have to pay ourselves first, and then pay the bills. There's got to be a balance there, I think. But yes, we have to make sure that we're taken care of because, man, there's so many things out there that can happen. Life happens.
Exactly.
All right. So, what do you recommend is the best way to keep track of your credit on an ongoing basis?
Well, I recommend anything that's, a free app. If you're getting, if you get access to something called Credit Karma, Karma, that will give you 2 of your 3 credit reports. Just be careful. The scores are not exactly the scores you would see when you went to go get a loan, like a mortgage or a car loan. They might be a little bit higher than what you would expect. However, the account details are what you're watching. Make sure you don't have anything negative that pops on there that you didn't know about. It's not unusual for someone to have a medical collection or utility collection that is popped on there in error, but still it affects you. So those email alerts are really important. So keep up to date with the email alerts. If anything gets on there, then deal with it. Some people have credit cards that have a credit reporting service. And it's just important to look at the details. Don't focus on a number and then move on. Focus on, if there's any number of negative collections, that kind of thing.
Okay. So you mentioned that there could be some negative things pop up or unexpected things such as an unexpected collection. But you mentioned earlier you just didn't want to dispute that because it may be accurate and could cause further problems. So what would be the best way to handle that situation if you did notice that?
Well, in my experience, the best, most effective way to challenge, and I use that word because I don't want people just hitting the dispute button, but calling the creditor, whether it's a medical provider, not the collector, but if it's the original utility company or the cell phone company, and get to the bottom of why they claim that you owe it. Now, they can either say, no, it's been paid, it was paid late, but yes, it's done, insurance paid late. Get it in writing so that when you do challenge it directly with the credit bureau, you're providing the creditor information to say that it should be removed. And so that's where what we call a deletion letter. So if you're calling the doctor's office and they say, no, actually, you did get paid, that got paid by the insurance company. So can I have that in writing that I don't owe it? And that's all. You just have to have documentation. Just simply disputing something is where people go wrong, and it doesn't come up.
Exactly. So it's always like the best principle. Anything in writing to dispute it. Very, very good point, because we've really got to keep an eye on things nowadays, and inflation is crazy. So we've got to make sure we're spending everything wisely nowadays.
Exactly. Yeah.
Yeah. So you are a financial advisor. Where does the credit rating come into play when you are helping people with their credit in order to achieve their financial goals? And can you give me some insight where the client's credit made the difference in achieving the financial goals?
Well, I would say, as we mentioned before, we drill into their debt as part of their budget. And I can tell right away if somebody's paying high interest debt, mortgage, car loan, so forth. So we certainly want to get to the bottom of that. The other thing is, lately we've had a really great benefit to partner with a specialist on college loans. And so when someone's getting a mortgage, the way their college loans are reporting is really important, because it can affect what they call the debt to income ratio. I've had clients that were knocked out of a loan approval because of their college loans, because the payment was interpreted by the lender in one way when it should have been done in a different way. And so
wow.
we can help correct that, so that, for instance, if you're, maybe your college loan is being paid based on income, income driven, they call it. However, your credit reporting would suggest that you're paying 1% of the loan, which can be huge. So we get those things fixed so that they can get approved for the mortgage. And another thing is, people can be affected as far as their security clearance, as I mentioned. So I've had some clients that needed to really clean up their credit because they were going to lose the higher security clearance, for instance, through government or military. And then, as I said before, people are paying way too much for their car loans and things like that. I had a guy who was paying 26% interest on his car loan.
Wow.
Yeah. Well, we were able to get that sorted out, and he's in much better shape now, and he's saving and paying off other debt. So, those things are, we call it finding the money, right?
Absolutely.
Definitely paying high interest debt is wasted.
So. Yeah, absolutely. And that's why it's so important to keep an eye on this stuff, because like we said, the lower the rating, it's going to cost you more money. And that's just a waste. Why give the banks or creditors or whoever more money? Let's get that worked out. Keep it in your pocket. And right now, there's so much uncertainty with the student loan situation. I would say, and maybe you can advise same thing, maybe something different. But with any kind of questions with student loans, they could reach out to us and see what we can do for them, because there's a ton of uncertainty right now. We don't know what's happening. Things are changing on the fly. What else could you expand on that, if anything?
Well, I would say, student loan situation right now in the federal loan system, there are so many great tips that we get from our experts in helping our clients. I can give you an example. The other day, I had a teacher who had $198,000 in student loans because she did a master's degree, specialized degree. She has qualified for 10 years of public service because she worked in public schools. She had no idea, because during some of those years, she was on forbearance, which means you're not paying and you're not accruing interest. The federal loan system has changed so that people are getting public service credits during that time that they weren't actually paying, but they were serving, working in public service. So she has just gotten confirmation that all of her loans will be forgiven tax-free because she has done the 10 years of service. It wasn't continuous service. She had different schools she worked at. She was in the private sector and went back in. But that is massive. That's $198,000. And those are great, situations for clients who thought that burden was going to stay with them for a long time.
Absolutely. That's found money. You thought you don't have to be spending it, and that's freed up. You can do other things with it.
Right. And it reports on your credit report. So it came up when she was renting a house. It came up when she was in the middle of a negotiation on another loan. So it will follow you. And so that's why, instead of sticking your head in the sand, we we're excited that we can come up with some great solutions.
Absolutely. Well, we're coming to the end of the show. Is there any last thoughts you would like to give us here at the end?
I guess just that, often people will say to me, "Oh, Barb, my credit's bad. You can't help me," or "It'll take forever," or "I had a bankruptcy, so I can never get credit." None of those things are true. Credit can be turned around very quickly, but you got to have someone who knows what they're doing. And you need to work, even if you've just filed bankruptcy and it's discharged, you need to sit down, moving forward, establish credit, and you can. And get back on track quickly. So it doesn't take as long as people often think.
Well, that's some great tips. Thank you for joining us today.
All right. Thanks for having me.
All right. Remember, follow, like, share. We want to get people educated. Check me out, RobbieSouth.com. If you have any questions, reach out to us. Set an appointment with us. We'll get you on the road to recovery. Y'all have a great day.